in about 15 minutes or so, we will see the release of the US ISM Non-Manufacturing PMI. So you can see one table on the whiteboard with the anticipated forecast according to a survey conducted by Bloomberg with the previous data, as well as with the chart of how the indicator has been developing over the period of 12 months. So what we can say, in order to elaborate a little bit on that further, is that the U.S. services sector index fell to 53.9 in November from 55.4 in October, indicating cautious spending by consumers. This lukewarm expansion rate was lower than 55.4 forecast by analysts. The employment gauge fell to 52.5 from October's 56.2 to hit its lowest since May, while businesses activity growth slowed to 55.5 last month from 59.7 in October. Growth in the services sector was steady in 2013 with the average of 55 over the past 12 months. Service companies have grown at a modest pace this year, and we can also see that if we look at some of the forecasts, one second here, we can also have a look at what some of the economists are actually saying and what they are expecting. Right here are just some of the economists that were conducted by Bloomberg, where they provided their expert opinion on what we can anticipate. Right here we have some of the economists, the firms that they represent. As mentioned, the median forecast is 54.6, the high estimate being 57.7, while the low estimate is 53.0. What we can also ask that the survey typically follows growth in consumer spending, which was restrained for most of last year, but Americans have opened their wallets a little bit more in recent months. That's a big reason economists actually expect that the activity did in fact increase in the month that we're expected to see in about 10 minutes. We can also add what some of the Dukascopy community forecast members are saying and what the expected outcome might be on one of the three currency pairs, USD, Japanese yen. So overall, based on the chart right here, we can actually say that 63% of the Dukascopy community members that took part in this poll believe that the impacts will be bullish, and some of them support their views by saying USD seems to be sure-footed and expected better data than previous, while those who are a little bit more bearish on the economic indicator believe that, well, for example, G's says, I would not go with not meet the expectations. There has not been much of the uptrend in purchasing managers' activity. So this is some of the data, some of the fundamentals, and if we talk a little bit further about the technicals, then I would be more than thrilled to pass the word to my colleague Thomas, who will be talking about the potential negative impact of the US ISM Non-Manufacturing PMI.
To present it, I'll be talking about possible negative impact on the Aussie United States dollar. That is the currency pair I have chosen, and shortly when my screen sharing of my trading platform while it loads, I will show why. So what you're seeing on the whiteboard is actually screen sharing of my platform, and you're seeing Aussie United States dollar 1 minute chart. So I chose Aussie United States dollar, first of all, because current market sentiment is strongly bullish, meaning that if United States manufacturing PMI numbers came out worse than expected, Aussie becomes relatively stronger and the pair goes up. So current market sentiment is strongly bullish. 65% of traders already expect the pair to go higher. 76% of pending orders in the 50 pip range around the current market price are also set to go long. So in case of some volatility, when the news comes out, actually there will be a substantial support for the pair to push it higher, and also OTC is being bought in 69% of all cases across the market, so it shows rather clear and determined point of view of the traders towards the OTC. So yeah, as I mentioned, you're seeing Aussie United States dollar 1 minute chart, and for the past, let me show full picture, and for the past 2.5 hours, it has been trading around the daily pivot point, which is located at 0.8946, and you can see in the past minutes it has been somewhat choppy, a little bit maybe even turbulent around the edges. So we can see that I put the stop loss around the daily low weekly pivot point at 0.89354. However, it would be possible at some point to push it a little bit higher at 89.388. Now let's say that would be a very short term target, which you can see right away here, as this is the second lowest level the pair had today. You can see the daily low right over here, and that would be the second lowest level. Now continuing to more on the upside, for you can see I made a typo right over here. It's 0.89709. So I put the take profit. I would put the take profit for, let's say, more medium to long-term outlook at 0.8979. As I mentioned, that would be a monthly pivot point. However, for a short trade, for shorter traders, let's say 1 to 2 minutes, maybe up to 5 minutes after the release of the data, we could put it somewhere around 89.55 right over here, as this has been actually the level the pair stayed below since 11 GMT right over here. So yeah, that being said, I guess, oh yeah, I forgot to talk about the technicals, which of them actually support this scenario, which don't. Let me do that now. As you can see, actually, you can see that we're having a rather strong neutral outlook from the technicals who predict trading points. So it's actually very likely that the pair would stay somewhat range bound. However, due to the recent sellout, let me just put in the wider range 1 minute chart, which you can see right over here. We can see the trade indicators in the most relevant horizons actually are giving strong bearish outlook. But as I mentioned, this is due to the indicated sell-off. However, you can see that for quite some time the pair was somewhat range bound and consolidating. So yeah, that being said, now I'm pretty sure I mentioned all that could be done. So yeah, daily low for the medium to long outlook at the stop loss, I mean, for the medium to long outlook at 0.89354. Take profit at the monthly pivot point at 0.8979, and for the short-term traders, take profit at the 0.8955 and stop loss at 0.8938. So yeah, I guess I will leave this screenshot on the whiteboard, and with 6 minutes to go till the release of the data, let me just put everything more in a more convenient and concise way. And with 6 minutes left to go till the release of the data, and then I give floor to my colleague Alexander, who will talk, if I recall correctly, about United States dollar Swiss franc, and will present possible positive effects of the release of the data. So Alexander, I give floor back to you.
As Thomas already mentioned, I'll be speaking about the positive surprise trading strategy, which is based on United States dollar and Swiss franc currency pair. And as you can see, the pair has been strongly bullish just recently, and actually I'm currently showing a 4-hour chart. And as you can see, just on January 2nd, the pair just penetrated the strong resistance line around 98.91. And as you can see, since the beginning of November, the pair has been trading in boundaries of the double bottom pattern, which was 223 bar long, and had actually quite significant quality and magnitude, meaning that traders were able to make some profitable trades on the pair, as it was highly volatile just recently. And currently the pair is trading at 90.53. Yeah, and the potential trading strategy is with the entrance at the market price, which is 90.52, as already said. The potential take profit could be placed at 90.80, which is actually a daily resistance. And let me just slightly zoom in a bit, and that will be almost 30 pips from the market price, while the potential stop loss can be placed at 90.44, sorry, just 16 pips lower than the market price. And actually that's represented by a daily pivot and the 4-hour support. And as always, moreover, as you can see on the minute chart, the pair has been experiencing some difficulties around this level, so we can suggest that in case of the worse than expected data, the pair will be able to depreciate to this level. However, as we are speaking currently about the positive surprise trading strategy, let's have a look at the market sentiment, which is currently strongly bullish, as almost 72% of traders are holding long positions, expecting the greenback to appreciate versus the Swiss franc. Meanwhile, the greenback is bought in 52% of all cases, while the Swiss currency is sold in 74% of all cases across the board. So the attitude towards the Swiss franc is strongly bearish currently. Meanwhile, so if we assume that the data will be stronger than expected, and for example, we'll see US non-manufacturing PMI above 54.6, then I guess we can have a look at pending orders, and as you can see, they are also suggesting further appreciation of the pair. So more than 60% of pending orders in the 50 pips range are placed to buy the pair, while in 100 pips range, even more orders are placed to buy the greenback versus the Swiss franc. Yeah. And as always, let's have a look at technical indicators. And as you can see, the majority of them are sending buy signals, and aggregate indicators on the 10 minutes, 1 hour, and 4-hour charts are sending buy signals, meaning that in a short and a medium term, the pair has great potential to appreciate further, and the potential take profit at 90.80 looks reachable, I guess, in the nearest future, as it's just less than 30 pips above the market price, current market price. Yes, so we still have about 3 minutes before the news release, so let's open the 1 minute chart and let's have a look what was happening with the price just today. And so, just a second, guys. Okay, I guess that will. Yeah. So, just today, as you can see, the pair has been highly volatile, and it was okay. Here is the beginning of the week, and actually the pair is almost trading at the level where the price opened this week. Yeah, so just today the pair was fluctuating in about 35 pips range, so meaning that the take profit is placed just 30 pips above the market price. I guess the level could be reachable in the nearest future, and currently the pair is fluctuating at 90.52, just a couple of pips below the 200 minute simple moving average, just 2 pips below it, sorry. So the first target for long traders will be obviously this level, while the next key level is located at 19.70. That will be a recent and this week's high. Yeah, however, the potential take profit is recommended to place even 10 pips above this level. So just a couple of seconds left before the news release, and just currently the price is still fluctuating around the same level of 90.52. So guess it's already time for the news. So the actual reading is 53. Yeah, that's slightly worse than expected and even below the last month's reading. So in this case, I guess we need to have a look at Aussie and greenback currency pair and have a look at Thomas' negative surprise trading strategy. And if I recall correctly, Thomas was suggesting to place take profit at 0.8970. So let me just open 1 minute chart. Yeah. And the pair is currently appreciating, obviously, and just trying to reach a recent high, and currently it's trading at 89.50, while the potential take profit could be placed at daily resistance, I guess, yeah, which is still around 15 pips above the market price. However, meaning that the data came strongly worse than expected, I guess. Yeah, I guess the pair has a great potential to appreciate it. So then we'll see some weakness in the greenback in the nearest future. Yep, I hope that was useful for some of you, and thank you for attention, and giving the floor back to you, Gita.
Thank you very much, Thomas and Alex, for your great technical analysis, and thanks everyone for joining us. And I guess we should get back to our new webinar that is going to be